Hey everyone! Ever wondered what a safe haven asset is and why it's crucial for protecting your investments? Well, you're in the right place. Let's dive in. So, what exactly is a safe haven asset? It's basically a type of investment that is expected to retain or increase in value during times of market turbulence or economic downturns. Pretty handy, right? Now, you might be asking, which assets are considered safe havens? Great question. Traditionally, gold has been the go-to safe haven. It's not only shiny and nice to look at, but it also holds its value well when things get rocky. Then there's US Treasury bonds, super reliable because they're backed by the US government. And let's not forget about the Swiss franc and Japanese yen, which are powerhouse currencies during economic uncertainty. But why should you, as a trader, care about these assets? It boils down to one word: protection. When the stock market is doing a roller coaster impression, safe haven assets can be like a financial security blanket, keeping your portfolio stable and secure. Using these assets effectively, however, requires some strategy. It's not just about buying gold or bonds and forgetting about them. You need to watch the markets, understand economic indicators, and sometimes be ready to move quickly. Remember, incorporating safe haven assets into your trading strategy doesn't mean avoiding risk altogether. It's about balancing your risk during different economic climates. It's making sure you're not putting all your eggs in one basket, especially when that basket is looking a bit wobbly. So, there you have it. Whether you're a seasoned trader or just starting out, understanding and utilizing safe haven assets can be a game changer for your investment strategy. Thanks for watching, and here's to making smarter, safer investment choices.